Hey, testing, testing, 1, 2, 3, testing, 1, 2, 3. The rain in Spain falls mainly on the plains. The ants in France stay mainly in your pants. All right, hey, good morning, everybody. How are you doing today? It's just after 7:30 in the morning, New York time, 2 hours before Wall Street opens for trading. Approximately London lunch. It's a good time to get together for our daily Forex trading strategy session. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com. Thank you for being a client. We're here at Forex.today for this session. Now, TradersWay is an ECN that offers not just Forex, but also the ability to trade energies, metals, indices, and scalp and hedge with binary options. A little of everything that you need. Yes, tomorrow we won't be here at Forex.today. We'll be at fxstreet.com, and that's for non-farm payrolls. Isn't that interesting? Released on a Thursday. So just go to fxstreet.com and you can register there. In fact, if you want, just scroll down. There I am. The 110th month that I've done non-farm payrolls. 110 months. So you just go there and 424 people are registered for that. So save your spot. And also just to update you, if you go to forex.day, yesterday's video is up there and available for you to watch again. Or if you're watching this on a different website like, I don't know, YouTube, would you leave a comment? I'd appreciate that. Anyways, this is the one we did yesterday. Right there. And so today is what, July 1st, Happy Canada Day. Also the first day of the second half of 2015. Maybe this year will be better than the last. So on July 1st, we already have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, at least 12 trading ideas for today. I guess that's why they call it Forex today. Check it out. All right. So hopefully you guys were here yesterday. Oh, you guys are so funny. Why don't you let me know these things earlier? After all of that. Silly. How silly. Anyways. Silly goose. Yeah, it's hard. I mean, I'm talking. I can't read and talk, right? So silly. Silly goose. Yeah, sometimes these webinar software stuff is funny. So anyways, yeah, and then of course the other thing I talked about was FX Street. So go to fxstreet.com, scroll down to the bottom, you'll see the event, Trade Non-Farm Payrolls number 110. Click on that and register. You know, there was just some weird uploading error. It's still uploading to YouTube, or YouTube is still processing it. So I don't know what happened to that. Silly YouTube. So anyways, yeah, Forex today, already at least a dozen trading ideas and stuff. So check that out. Now, here's the chart from yesterday. And you may recall that we were about here. And we went through the technical analysis, and I suggested that it would go up to the weekly pivot, then down to about just below 110, rally back up, make a higher low, and then head up. And what it ended up doing was going up. Let's do this in a different color. Maybe it'll be easier. It's like lime green or something. So we were here, like I said. So it went up, came down, consolidated, came to about there, just below or just right on top of 110, spiked up, came down, we're right here now. How would you grade that as far as accuracy of predicting future price action 24 hours before it happened on a 15-minute chart? 100%, pretty close. Well, I would say 100. The interesting part, though, guys, is that if it's predictable, or let's say if it, if it's predictable, it can be teachable, and if it's teachable, it's learnable, and all that kind of stuff, right? And that there's, that you will be able to do that. Now, would you say that that's, easy price action to predict? Was that pretty simple, or was that pretty complex as far as the behavior of making a higher high, then making a lower low, and then, maybe all that kind of stuff? Seems like it, but it seems fairly complex. But what we did is we looked at it for multiple time frames. Right? So one of the things we looked at, for example, let's say over here on the left, let's say a 4-hour chart suggested this. Okay? The trick with trading is to say, okay, it's going to do that. It's going to make a higher high, higher low, higher high on a 4-hour. So on a 15-minute chart, you have to learn how the 15-minute works within that, right? All right. So on and so forth. That there's macro waves and there's micro waves type of thing. Elliott Wave does call them waves. That's the funny thing about Elliott Wave. People, I shouldn't say too much because I'm not an expert in Elliott Wave, but I really despise wave counting just as an idea. It doesn't fit my personality. What I like, what we do, let's say what I teach at boot camp is more of a combination of price action and fractal geometry, which means this big move, this macro move on the 4-hour, it's just a Fibonacci retracement and extension, just like all the little blue ones. But the blue ones are just on different time frames. And that's all Elliott wave really is, 90% of it. What I don't like is then saying, well, because this is a certain wave, that has to be a certain wave, and you know what? I don't think that way. And maybe, you know, maybe it's accurate, maybe it's not. I don't really know. But I would rather, instead of counting waves, I would rather say, you know, we're at key support, we're at a key reversal pivot, the long-term trend is up. I think I'm going to buy it at support. Not because it's you know, a C correction wave on a 5, I don't know, whatever. Igor, you know, Elliot, you know, I don't know. Here's the thing. I'm self-taught, and I think a lot of what I do is very, very, very similar to what the Elliott wave theory is. So, from my point of view, from what I know, it's not that smart. It's just common sense. I mean, if you spent 10 years spending, you know, if you spent 10 years observing and studying the foreign exchange market in regards to technical analysis, you'd probably come up with something very similar. I mean, that's what I did. You know, do I count waves? No, but you know, is it like, that's like saying, well, Leonardo Fibonacci is, you know, was a brilliant person. No, think of it. Think of it this way, right? What we're looking at here is, let's say, a move like this. And Elliott Wave, Mr. Genius, said somewhere between 1/3 and 2/3 of a pullback, it'll continue up. Now, why do we get caught up on the stupid, you know, 38.2% versus a 61.8%, you know? Oh, well, you know, it's the ratio, it's the sequence, the mathematical sequence of 0, 1, 1, 2, 3, right, 5, 8, 13, 21, 34, 55, 89, 144, 233, 377. Like, and there's like a ratio between all those, blah, 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 blah. It's all blah. Dude, think of it as like, it's either going to retrace 1/3, 1.5, 2/3. Like, that's it. Yeah, or about 50%, Mark. Mark would be fine. Just a little, about 50%. You know, somewhere between 1/3 and 2/3. I mean, that. Come on, guys. Like, it's not LA. It's not a 382. I mean, we've all been trained to behave in a certain way. But come on, just if you can buy it on a pullback, buy it on a pullback. Right? Simplify it. Don't get caught up on your indicators and, you know, Elliott wave and Fibonacci and this, that, and the other thing. Look, if the market is going up, if we're in a series of upward moves, buy the dips. I don't care if it's 21% or 44%, right? 58.2%. I don't care, but the farther it pulls back, the less likely it's going to go up because it's just less bullish, or in the reverse, right? Simplify everything, guys. Don't get caught up in the magic indicators of, oh, the oscillators of this and the moving averages of that, and just buy a retracement if it's going up. Buy, you know, that's it. Simplify, simplify, simplify. Take all the mystery and magic out of it. Okay? All right. So to get to this conclusion, we looked at multiple time frames. And we did a couple of things too in regards to simplifying. You know, where would a bear sell and where would a bull buy? Right? I think that was also part of it. That's it. That's pretty simplified, isn't it? That's what we're kind of looking at here. Okay. Where were the orders in the market today? 618 Fibonacci retracement, 50% Fibonacci retracement, 382 Fibonacci retracement. So a bear would have had sell orders somewhere around in that zone. Okay, again, 382, 50%, 618. Now, what do you think? Were there really orders, let's say at that 382 Fibonacci retracement? You're saying no? Look, this gray line is the 382 Fibonacci, 382, 38.2% Fibonacci retracement. And then just slightly above that is the, what was it, the daily pivot point? So I think, aha, good question. Which move did I fib? I didn't fib a move at all. So one of the things I look at is yesterday's high, yesterday's low, so almost like a pivot point, right? Yesterday's close. So a central pivot point would be low, right? It'd be lower than yesterday's move, right? So anyways, the high, low, and close, that tells me markets essentially did this. And that a bear would assume continuation to the downside, right? And a bear would look at the fib levels. So for a swing trade, in this case, because it closed lower, right, closed lower than the day started, it's a bearish day. So generally speaking, today should be bearish, has a, let's say, great potential to be bearish, or to say it differently, this type of swing strategy would lead you to anticipate bearish move today. So as a bear, where do you want to sell? High or low? Well, high. So what you want to do is identify a sell zone somewhere between 382 and 618 Fibonacci retracement. Right? So you might put a limit order to sell on the 382 and have your stop up here. Okay? And that's that. So the strategy would be sell in the red zone and go away. You could also put your stop, you know, here if you want and say, well, if it makes a 786, you kind of don't want to be around. It's just like it's too much. It's too far away, right? Because here you're shorting at about 70. So maybe your just stop is just above the psychological level. So you're risking about 40 pips or 50 pips. Okay. Well, you say it looks like a terrible risk-reward ratio. Well, you wouldn't be able to know unless you've analyzed it and created a target. So a bear is looking at it this way, Mike. Okay. So at 382 predicts a 1618. So you're down here. So that's about a 1-for-1, a little better than 1-for-1. No, wait, you're oh, I'm sorry. No, you're way up there at 70. No, you're risking 40 or 50 pips to make 125. That's not terrible at all. All right? Because if you're taking that trade, obviously you're a bear and you assume it's going to make a lower low. So the 382 predicts a 1618. Okay? So, yeah, you're... Well, once again, Mike, it shouldn't be confusing. If you're a bear, you sold it at the 382, assuming it's going to go down. Doesn't seem confusing to me. Yesterday was a bearish day, so today is going to be a bearish day. You sold the 382 Fibonacci, right? So if you're interested in that type of strategy, again, I've been asking you to focus on one thing at a time. So one thing that you can look at now is every new trading day before the London Open, you look at yesterday's high and yesterday's low. So you're just looking at this area here. Okay? And you ask yourself, okay, you know, price is down here, so I'm a bear. Remember, the day before was, what did the day before look like? High, right? There's the low. Someone, right? And it went a little higher than we would have liked, but so anyway, so now you've summarized yesterday like this, so it's bearish. So you're simply going to look to sell a rally. Well, you're just measuring a different time frame. Shouldn't matter. I mean, even a pivot point tells you the same thing. Where's your pivot point today versus yesterday's central pivot point? It's probably lower. Good. That means you're a bear. Or let's say nothing. Just you're a bear, right? You're looking to sell at resistance. Now, is price doing? Oops. Is price doing this? Well, then you're not trading. If you're a bear, right? It seems to me price isn't doing that, right? You're lower than there, so it's a bearish market. So where would you sell? Well, how about let's identify like psychological levels. Okay, 120, 112, right? It's about what? About here. Daily central pivot point is about there. Using slightly different color. The fib levels are here. Okay. So somewhere in these areas, you would look to sell. Because you're a bear. And we've made a lower high and a lower low. Lower high. Right? Lower low. It's not bullish. There's no way that that can be bullish. So what's your plan for today? Well, you could have limit orders, kind of like, here's a cluster. We got a daily central pivot point in my yellow zone. That doesn't work, maybe sell the psychological level, which is also a 618. So you're either going to sell here around 70 or try again around the psych level higher up. Why wouldn't you count the lower low before? You mean this one? Way down here Monday? Yeah, well, we're working our way down if you're a bear. Okay? The current price action is this. Okay? And of course, you'll know if the market has changed its mind if it does this. And then you stop your planning for a while. Okay? But a change of trend occurs when, okay, so this higher, man, that's a terrible color. Let's change this sucker. Let's make it red again. All right. Okay. But that's, is that magenta? It's magenta. All right. All right, so there's a high. Bulls are cool with that one. There's a higher low. Bulls are cool with that one. Are bulls cool with this? That's when you have to stop being a bull. It's called a change of trend. No, no, on a different time frame, Mike. That's always going to be there. That's true. There's no doubt about it. But right now, the price action is this. Okay. Now, on the higher time frame, let's look at it this way, Mike. Let's use blue. Okay, there might be something like this. Now, how do you put that together on a lower time frame? Like I was showing you before. We're going to have a significant pullback. So on other time frames, it's going to have to make a lower high, lower low. Right? And then let's say now the bulls do take over. What's it going to look like now? Well, it's going to have to make a serious uplift, but it's not going to go straight up, right? So now it's got to make a higher low and then a higher high. So now we have this, if this is the low, because that's about a 618, right? That's about 2/3 of a retracement, about 66%, let's say, of this move. Right, of the blue one up. Okay, so then it's going to have to, it'll rise past 112, come back down, and then make a higher low, which would then predict a higher high here. So a change of trend again. So on the higher time frame, you still may be a bull, which is absolutely fine. So you ask yourself, as a bull, where would I like to buy? A bull would like to buy somewhere between a 3.2 and 2.8 Fibonacci retracement, right? Well, that would be that, of this range here. Cool. Is there anything else that could help you predict which areas bulls might want to get back in? So you start looking at a bunch of things. Where are the psychological levels? Well, we got 111 here. Okay, for example. And now why did I pick out this area as a potential short? Well, it needs to make a higher low if it's going to go up. It has to make a higher low. So where would it do that? Well, how about the psychological level, again, of 112? It won't be a fib anymore because we're probably going to do that tomorrow. So, so those will change, but the psychological level won't change. And in fact, the next day, I think this might be too low. I think the next day, I'm going to look at this area here. So let me do a different color. Really, what I would probably analyze tomorrow is the move will come like that. The green, not the sort of the red one. So it'll go up to the 12, down to 1150, which is this old support, will act like support again, and then make high. Okay? And so once again, on the highest time frame, let's say, I don't know what you're looking at, this is not a 15-minute chart, but let's say a 4-hour. If you're a Mike, the only thing that you've analyzed is this. That it made a high, and that you think it will retrace for a while and then make a higher high, right? Higher low, higher high. So to make this drop on a smaller time frame, you need a significant pullback. So on a 15-minute chart, it will make a change of trend, get down to your buy zone, and then change trend back up. So it'll go bullish, bearish, bullish. Which is not a whole lot different of what we analyzed yesterday. Okay? So that's the funny thing, right? We kind of did that a bit yesterday, right? I have this as up until this area and then down. Why? Because I predicted a lower low. So therefore, it's going to make a lower high. And then if it goes up, it's going to have to do a higher low. So I would have to predict now a change of trend. And why did I come up with the change of trend? Because if we came down to the mean zone, it's a 618 Fibonacci retracement of the move high. So this is exactly what I did yesterday, Mike. Same analysis. Okay? Isn't that nice? So that's why I tell you, start on the higher time frames first. And if you're like looking at this chart, let's say on a 4-hour, what you're probably looking at is it made a higher high, therefore it's going to make a higher low. Or at least it has the potential. Good, done. So how are you going to squirrel your way back down to here on a 15-minute chart? Well, price action on the way down. So at the high, it's got to do a change of trend down. And it'll head down to the 618 area, and then if it turns bullish, it's going to have to change of trend again. From bearish back to bullish. So there's only three levels that I'm watching on this chart. And one of them is not even that important. You're either a bear here or you're a seller there. That's how we left it yesterday. So you sold it yesterday at what, 112.36? So you've made more than 100 pips on the way down. And for that, you must have been a bear. And a bull, you're preparing to buy it. Right? So everything else is just boom. If you're doing something else, you're just doing something else. But that's what we talked about yesterday. You either sell it high up there or you buy it low down here, and the rest is for the pigs. You're either a bull, a bear, or a pig. Cool, huh? How about even farther out analysis? Now we can go out not just hours in advance. We can go weeks in advance on some of this analysis and look at our kitty CAD. This is months and months and months of price action. Here we are just moving around, lower low, right? And then we consolidate here, and now up. Very accurate levels. Like, look at this one. It was a little more aggressive, but it came down about a 50%, right? So you're long around 122, let's say, and we're on our way to 128.
This is a 24-hour live broadcast test channel from the Trade the News Broadcast Network.
ADP due out momentarily. Plus 237,000 above the 218 expected to beat there for ADP. Again, 237,000.
Yeah, good number. 237 versus 218 expected. Good number. Why did I do that? Come on, dude. Well, I don't think the Fed's going to change their policy because of an ADP report, but it does suggest non-farm payrolls should be pretty good since the correlation's been so high over the last few years because of the central banking manipulation. So all it does is suggest tomorrow will be good. And if tomorrow's good, that, the Fed will obviously take that into consideration. Why? Because they told us specifically that an increase in jobs and an increase in wages will make them raise the rates. So we're coming up to the 80 mark, and there's a lot of orders sitting on 80 usually, so it'll be a little bit of a battle. If you can get through this, which we seem to be doing, now it's increasing its velocity. So I'm going to move my stop to break even. Why not? I don't mind hero or zero. I'll put the target about there. Next. All right. We're also on a daily pivot around it in here, I think, too, somewhere. Someone on a different chart, I have it as a pivot, but I guess there's the daily S high on this one. All right. So, any further requests? What do we got going on? How can I help? Pound dollar. Okay, well, you're on a support zone, right? Okay, Igor, that was a new scalp, so I don't need that. That's just typical new scalp, right? I sold a 3A2 Fibonacci retracement. Okay. So here's the big dog. Okay. So where's the support if you're a bull? Sort of here. Okay. If you're a bear, you probably already sold the weekly central pivot point, right? and you got like kind of like this kind of thing going. Okay, so somewhere around the green zone here, somewhere around 55, 50 kind of area, I would look for a change of trend to the upside. Okay, so a bear, you already sold it high. Bull, you're waiting for it to come down here, do a change of trend, and then you buy it back up. Okay. I have weekly S2 right here at 29, but the psych level's 55.00, so somewhere in there. Doesn't matter to me. Now remember, guys, because I'm very picky on language, especially since we have so many people from different cultures. But I'm picky on everyone when it comes to language. So you say, but Euro USD is supposed to go up. Whoa, 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 whoa! Watch your language, boy. That's not. You're not saying it right. That's not what I said. If this gray zone is a 6-way Fibonacci retracement of the low to the high. If you're a bull, are you listening to me? I'm not telling you it's going up. I'm saying if you're a bull, this is a zone in which you will pay attention for a change of trend on a small time frame that might reverse it to the upside. That's way different than Euro USD is supposed to go up. I didn't say that. For a bull, you're looking for buy zones. You're looking for potential support. You are looking for support. Where would you expect the support to be? Well, how about a 618 Fibonacci retracement? Is there anything else around here that might contribute to support? How about things like psych levels, midpoint psych levels, pivot points? Find your levels of support. Then, if price gets down there, drop to a smaller time frame and look for a change in trend, and then start buying. Nobody said Euro USD was supposed to go up. You're not thinking about it properly. It doesn't have to do anything. This thing could fall for 1,100 pips, and it wouldn't surprise me. But if you happen to be bullish, you need to identify support and set up an ambush, because if you're at support and you observe it reversing, you will have an opportunity as a bull, even on the short term. Even if you're wrong on the short term, it should continue for a while. Because even in a downtrend, price moves up. Right? Look, even if it's moving down, it's still going to come up, and then it's going to go down again. But which one goes up and reverses? Well, we don't know. But if you're a bull, you buy here or you buy here. The second one being the better trade because it's already reversed. Right? So going back to the pound, someone said, well, if the euro's supposed to go up, how could the pound go down? Look, whoa, euro's not supposed to go up. It could at key levels of support if bulls buy it. We don't know if they're going to buy it. And the pound could be completely different. These things could be falling 1,000 pips. It's the end of the euro as we know it. Why would it go up? If you're a bear, you're taking this down, all the way down. But if you're a bull, you're identifying the next level of support. This is what we do, guys, over and over. If you're a bear, identify levels of resistance. And if you're in a series of lower lows and lower highs, you're aggressive. You're selling those rallies. Okay? So be careful, guys. Make sure you're thinking about it right. You need to be able to look at your charts and say, I'm a bear. I've been a bear all week. I've been a bear all month. Did it make a lower low yesterday? What was yesterday's trading behavior like? Was it bullish or bearish? Oh, it was bearish. Good, because I'm a bear too. So today will probably be bearish too. Where's the resistance? Where's the cycle level, the pivot points? Where am I going to drop my stop or my lots? Where are my orders going to be placed? That's how you should be thinking. That's how you should be speaking and communicating. It's very important because you're training yourself. That's why some of you on your walls right now have charts printed out that say you're a bear on the Euro USD. Some might say bullish. That's fine. But you've printed it out. You've made the commitment. So in the morning, before the London market opens, you simply identify 2 or 3 areas in which you'd like to sell. There is no other possibility. Right? So like I keep saying to Mike's like, I don't get it, so confusing. No, you're confusing, Mike. Because if you thought that way, and if you did your analysis and if you made the commitment, you can only sell anyways. There's no confusion there. That couldn't be confusing. Right? Or if you're a bull, it can't be confusing because you've already made the decisions, you printed out the charts, you wrote it on the right on the chart with a big stinky felt tip marker, and it's on your wall. You're a bull on Euro USD. So every morning you wake up and you identify 2 areas, 2 logical areas that price might reverse and head up. There's nothing confusing about that. You could even write it down as a rule. 1, stay committed to your long-term bias, which is Euro USD up, if that's the case. Good. That's easy, because you don't have to do anything. 2, before the London Open, identify 2 levels of support. Anything you want. Price action, pivot points, psych level, couldn't care less. And then 3, wait for price to get there, or throw down a limit order and be done with it. Okay? So that's what I'm saying. So stop using the language of things like, I'm so confused, this is so confusing. You need to stop. You're training yourself. You say, I'm not confused. I know exactly what I want to do. Now, you might not get a trade set up today, but you should know exactly what you want to do. And I'm speaking to everyone as well. If you wake up in the morning and you don't know what you're going to do, you're on the path to failure. If you think you're going to log in and your charts are going to tell you, no, the charts have already moved. What you're supposed to be doing is identifying the next move. And therefore, you already need to know what you want to do. I'm a bear. Am I at resistance? What's the time of day? What's the price action suggest? Where are the pivots? So on and so forth, right? And you're setting this up, but you already know what you're going to do. Okay, guys? And I know some of you guys fight me on this. You just don't want to do it. And it's hard doing it your way. But it shouldn't be hard. Okay? It's difficult if there are so many variables you don't know that it's confusing. Well, there's only variables if you haven't made a decision already. Okay? So like pound dollar. Let's say you're a bear. Okay? You wake up in the morning and you want to sell somewhere in here. It's not confusing. That's it. It took me less than 1 second. If you're a bear, you want to sell somewhere between the 382 and 618 Fibonacci retracement. Is there anything else that could possibly act as resistance in that sell zone? How about the daily central pivot? All right, sounds good. Not confusing. It's only confusing if you're trying to figure things out. Right? Pick another chart. What are we, you want to do dollar bull? Let's pick all kinds of things. And scan the dollar. Dun, dun, dun. All right, we're going to have to change the templates. I'm okay with that. Let's do it. Template, Fibbits, template, Fibbits, template, Fibbits, template, Fibbits, template, Fibbits, template, Fibbits. You notice how I had all these on 5-minute charts and all the oscillators expanded? I can tell that I already made a decision whether I was a bull or a bear on the dollar, and I was getting ready to sell or buy, whatever the case was, oscillator cycles on the 5-minute. I wasn't even looking at price anymore. I was just waiting for those oscillators and boom, 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 boom. All right, so let's do this on a 15-minute chart. Let's get enough data. Okay, so we're bullish, right, on the dollar? All right. I've been bullish on the dollar since they announced the taper. And I told you I'd remain bullish until the Fed stops raising interest rate. So is this confusing? Right? I'm so confused. I've been a bull on the US dollar the day the Fed announced the taper. And I told people 6 months and 9 months before that I would remain a bear on the US dollar until the Fed announced the taper. How many people were with me way back then? That we talked about it for months and months and months and months. I'm a bear, I'm a bear, I'm a bear on the dollar, I'm bearish on the dollar, but I will change my strategy the day the Fed announces the taper. And then I will be bullish for years and years and years until the Fed stops raising interest. Now, I don't know if that's at 2%, 5%, or 10%. But that is my strategy. And I could easily talk about it months in advance and then immediately change. And therefore, I'm not confused. I want to buy the US dollar. So that makes my job pretty easy when I'm doing my analysis, right? I want to buy a dollar. So I wake up in the morning, I want to buy the dollar. Somewhere between the 382 and 618. Huh, look at that. I got a sweet order right at the London Open. Right, a couple hours after London Open, boom, gone. All right, Euro USD. Somewhere between the 382 and 618. Oh, boom, got that one. Next, what is this? Aussie dollar. I want to sell this somewhere between a 382 and 618. Weird. Okay. It was a nice move, but I'm checking that 15-minute charge. No, that's a weird one. All right. So there's probably nothing there. Okay, on this side I'm bullish, right? I'm still bullish on the dollar. 382 to 618. Didn't catch a move. Didn't pull back far enough. Too bad, so sad. Next, USN. I want to buy down in here. Ah, see? No so good. Next. USD CAD. 382, 619. Okay. That's one very, 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 very simplified swing strategy. Okay? Very, very simplified. You can certainly have, you can certainly learn how to adjust and refine the strategy. But yesterday's day. So today, if you could buy somewhere between, you see the daily central and the 382, that would be a very, very straightforward swing trading strategy. Okay? Very, very simple. You're not really adjusting for anything. But that's the beginning of a strategy, isn't it? And then over as you observe, yeah, so there's no trade. You see, Igor? You were sitting there waiting for it to retrace. No trade. Right. So Mike is right. If it did move back down there, it would have created a lower low. So let's adjust that. It would have done this. Then what? So Mike, you are long here. After the change of trend. Yeah, you could sell it, Mike, up here if you're a bear. But it wouldn't have worked for very long. So again, Mike, you got to start on the high time frames, like a 4 hour. All you would have seen is this. Yesterday's low, yesterday's high, yesterday's close, all right? Where did yesterday close? Here. Is that bullish, guys? Crazy bullish. Right? You know how to use the oscillators? Right? You can buy right off there and off you go. You could buy it off the moving averages, sure. Now, the swing trade strategy that I outlined would have preferred that it came back a lot farther. So a basic swing trade strategy is this. So was that fulfilled? No. Okay. Going back to these charts, if you decided to be a bull on the dollar using a very simplified swing strategy, which I've always for many years I've taught it. We call it the Asia fade because it's a pre-London type entry. So so anyways, you set that up, and you had two opportunities that would have been triggered yesterday. The Aussie was no good because you were a bear and you wanted to sell it high, but all the fibs were low, so nothing there. And the other ones didn't retrace enough. Fine. So only two trades, right? Okay. So some of them didn't work out, but that's part of it. That's part of trading, because you should be waiting. Not all of them are going to connect. You certainly lose a lot less money. You guys should consider trying that. So again, start by making a decision whether you're a bull on the dollar or a bear. And you need to be that way for quite some time because you're setting it up on a daily chart. So how about, hang on, wrong button. Yeah, daily. If you are you could start considering buying the Euro USD, or sorry, the Pound USD, based on this chart. Do you see it? So you would be preparing for today or maybe tomorrow for that process to start happening. Can you guys see it? You never close your eyes. Let me clear this up even more. And even that one. All right. You see it? There's potential for dollar bullishness in the next 2 or 3 days. Well, it could be today, like let's say the next 48 hours. So if you're a bull, you need to be planning that right now. Okay? Why would I say that? What is bullish here? $21 EMA, okay? Higher high, okay? Price above the 200, okay? Stokes, if it does start heading up, Stokes in a few days, like I said, in the next 48 hours, it'd probably cycle around. Remember, oscillators are lagging. 382, okay? All of these are very good answers, guys. Does it mean it's going to go up? No, doesn't mean anything. What it does mean is if you're a bull, you should prepare for the possibility. Okay? Couple areas to focus on. Okay? Another way of doing this is like this. High to low. Okay? So it just could possibly, okay, so here's the typical zone, right? So they're basically the 382 and 50% look pretty logical. So you could prepare for this, would be the general strategy. Is it going to do that? No, didn't say that. But what I did say is if you were a bull and you were identifying levels of support, we are nearing some of those levels now, and on a smaller time frame, if you observe a change in trend to the upside, perhaps you might want to start buying. Right? The language is important, isn't it? I think if you bought this now, you're a fool. If you sit here and you're bullish and you observe a reversal pattern and you bought it, you're a genius, genius, genius. You've done your analysis, you have a bias, you've identified levels of resistance, in this case support, and you observed a reversal pattern. Okay? And if you lose money, so what? Let it move to the next level. So, depending on the time frame, but it's all the same. There isn't one answer for that. One or all of them. Okay. Change of trend, change of trend, change of trend, but change of trend in the direction of your fundamental or long-term technical bias. Imagine that that was what dictated your trading behavior, guys. You only trade when you see changes of trend in the direction of your long-term technical or fundamental bias. How would you like to describe that to your friends and your family and to people that you meet? And they say, what do you do? So I'm a foreign currency trader. I use technical analysis to buy changes in price action in the direction of my long-term technical and fundamental bias. That's what I do. I do it over and over and over again. And a lot of the time I make money. Yes, confusion is gone. Very important, right? So write it down. You'd be amazed how important this is to the human brain. Not many other creatures on earth can write it down. Right? Step one, develop long-term technical or fundamental bias. Okay? 2, identify support and resistance and other such levels at which I would like to buy each and every day before the London Open. Three, a small time frame, trade changes in trend in the direction of my long-term technical or fundamental bias at the support or resistance levels that you identified. Holy moly. That doesn't sound confusing to me, right? If you do that for the next 6 months and continue to develop your technical and fundamental analysis skills, you'll be able to refine these entries based on your personal experience. Because you're going to miss a lot of trades. But it doesn't matter if a lot of your trades are losers anyways, right? But what do you gain out of this? Well, first of all, you have a long-term technical or fundamental bias. That can't be a bad thing. 2, you have very clear trading strategy identified. 3, you're developing some of the most important traits of a successful trader, and that is one that does have a plan, does have a long-term bias, and you're developing patience and discipline to execute the plan exactly the way you want to. Now, if you can develop those things, guys, you can do whatever you want in year 2, year 3, year 4, year 5. But I really, really doubt you can make it to year 3 or 4 or year 5 of successful trading years if you don't have patience and discipline, a long-term bias, right? If you don't enter in trades in the direction of your fundamental bias, right? Igor, we are talking about up. That's what we're talking about. Oh, not up, but down. Ha. Okay, change your time frame, but right. This is a daily chart. Okay. Now, if your analysis is this, I'm okay with that too. Okay? What is important is that you've made the decision. Okay? Is that how you're looking at it? Then fantastic. So as a bear now, what I would like to see is this. Okay? Right? That's called a lower high. If you can get that lower high and you're a bear, and you're like, I'm selling this 50% retracement, boom. Sounds like you know what you're talking about. Good. Make it happen. Okay? And a bull will be waiting for you. A bull will be waiting for you right here. I just realized I've gone on like another hour and a half type thing. But anyways, let me just wrap this up. Even if it's going down, it's still going to bounce in this zone somewhere and then make the lower high. That's the theory. That's what you should wait for. If you're a bear. Okay? Even if you're a bear, you want it to go up. So you make a lower high. And then once you get the lower low confirmed, change a trend. Okay? So I'll see you at fxstreet.com tomorrow for Trade Non-Farm Payrolls Live month number 110. Holy crap. It's amazing. 110 months. Yeah, 7:30, same time. It's a 3-hour session. Swing on by. Oh, you know what? What happened to my scalp? Yeah, tomorrow's a Thursday, but it's a holiday in the United States. Oh, did I get busted out break even? Yeah, obviously could have gotten out for something. Oh well, there you go. So peace on earth, may the pips be with you. May your profits be above average. That's all right, Mike. I'm here to help. And so the thing is, you know, you're, as you say, you're such a mess. You just need to stop that. I don't see what the problem is. You need to, like I said, write down those rules. Boom, clear as a bell. Technical or fundamental bias, like I said, it's up to you to do the homework and whatever way you want, make the decision, print it out, write it down, you're done. Very, very clear and concise. There's no possible way that you could be a mess. There's no possible way that this is confusing. There's absolutely none, and you need to speak in with certainty. If you're a bear, you're a bear. If you're a bear, you sell high. You sell high at resistance. When it's making lower highs, right? If you're a bear, you sell high at resistance in markets that have lower highs and lower lows. Not confusing at all. Very simple. Psych levels, pivot points, fib levels. Good. Wake up in the morning, identify 2 levels in which you might be interested in selling, drop into a small time frame, 5-minute chart, for example, look for changes of trend, pull the trigger, done. Very simple, very clear, very concise. Cool. I'll see you guys tomorrow. Thanks for being on my team. I really appreciate it. Cheers.